Right, our final presentation is from Condor Gold. It's AIM and TSX listed. The company is gold exploration development company with a focus on Nicaragua. Its principal asset is La India, which comprises of a large, highly prospective land package of 588 square kilometers, comprising 12 concessions. In November, investors learned the company would consider selling the assets of the company, and there have been updates about that process as well. We are joined now by Mark Child, who is the chairman and the chief executive. But we can still see Natalie's screen, so we shall just get Mark's presentation on. It's well worth the wait. I know that we're overrunning ever so slightly, but if we can get Mark's presentation on, if Mark could do that, very good. And we go to the slide show bits just at the top, on the tab there. Very good. Mark, I shall let you take.
Okay, just to check, can you hear me okay?
Yes, absolutely. Thank you.
Okay, good. Well, thank you very much for that introduction, Sarah. I'm just going to note the time at, so I've got 15 minutes of presentation. So this presentation I'm going to split between going through some slides and then something a bit different. We've got a 4-minute video to show you on the exploration on the main principal La India vein. So that India project is really fully permitted and construction ready. And that's taken us several years to get there. We've got a bankable feasibility study completed on the main pit, which we'll run the video on. And this slide is showing you where the site location of the processing plant is going to be. This is where the jaw crusher is. So I took this photo. We bought 1,000 hectares of land. We've cleared the site on 14 hectares. And as I said, we've got all the permits. Our base case is 100,000 ounces of gold a year. Here's our statutory disclaimer. On the reserve case, which we put out in October last year, and there's a 570-page document on CEDAR in Canada, we've 82,000 ounces of gold a year just out of probable mineral reserves. The total upfront capex is $106 million US. But we're targeting 100,000 ounces of gold by adding in 2 feeder pits, which I'll come on to. We bought a SAG mill, which is in country. We bought the land, and our expansion phase is to get to 150,000 ounces of gold. We believe we're on a major gold district, which I'm including some additional slides on, of over 5 to 10 million ounces of additional gold. And we've got pretty strong economics. We've got very high grade. Our all-in sustaining cash costs are roughly half the current gold price. We're valued at about $26 an ounce in the ground. Nicaragua is very mining friendly. Gold is the biggest export. I'll let people just look at this in their own time for speed. The shareholder breakdown, we have Jim Mellon, who's known to many people on the Master Investor conference where he was speaking as the Master Investor, and is our chairman and a 20.2% shareholder in Condor Gold. And he's been incredibly supportive over several years and been to the project. I would just say we've got at 30 pence, yesterday's valuation, we're about 54 million sterling market capitalization, or $67 million US. I'm trying to give here an indication of the valuations that this puts on the company. So this is all in the public domain. We have a total of 2.5 million ounces. If I include the silver credits and the Rio Luna concession, which is an additional 90,000 ounces of gold equivalent. So on that basis, if we take a gold in the ground number, we're 1.3% of a gold price if gold is $2,000 an ounce or $27 an ounce in the ground. These companies, when they get sold, tend to be anything between 3 to 10% of the gold price in the ground, depending on the stage of the advancement of the project, the political risk and appetite, basically. If we get to the 150,000 ounces of gold per annum, which we've done in a PEA, and these numbers are in the public domain, they're produced by SRK Consulting, and that this relates to our 2021 PEA. But if you look at that, as you can take the prices here at $1,700 an ounce gold. We have a net present value of 418 million. This is after upfront capex and after taxes. And then at 2,000, it's over 600 million. And at 2,200, it's over 670 million. So in terms of price to book, that's the other way to look at this, discount to NAV, we're ranging anything between 0.1 times to 0.16 times NAV. So the message is that's pretty undervalued, and that takes no account of the exploration upside. So here's the district. We've picked up deliberately over 587 square kilometers. We believe this is a major structural trend. And you can see this ridge of hills here between the white areas to the left and right are pretty, are paddy fields and grazing. And we've got major regional faults going through this district. This is a new slide. This is a sort of what if could the district be? And so the geologists run a detailed study. We've flown this with helicopter-borne geophysics and magnetics. We've done soil sampling over 300 square kilometers. And so this is the sort of study you do to say, what if, what could this be? This is very conceptual. So I just want to emphasize, this is sort of an internal planning document, which any major would do. And it's done by our geologists and external consultants. So what could this host? And if we looked at everything and everything came through, we think there could be up to an additional 12.6 million ounces of gold. Now, the easy low-hanging fruit is just to extend down the ore shoots and drill along. And that target is the first part of 3.4 million. But we do think we're on a very big gold district. I emphasize it's all got to be drilled out in due course. And there are 22 targets identified here. The core project that we have today is this 2.3 million ounces of gold, and there are 7 different deposits. The core are the 3 vein sets highlighted there of Landia, America, Mestiza. And then black, that's what's actually permitted. And here's the permitted area of 2.1 million ounces. And the magenta area is all the permitted boundaries. So that's all permitted for construction and extraction of that 2.1 million. Sorry, the open pit part is for extraction, but the open pit, the underground is underneath the pit. So that's just going to get a foregone conclusion that it's going to get permitted. And this is the open pit. So what I'd like to do now, if I could, is to run that video, if you don't mind, if you could put that on, Sarah or Tim.
Okay, Tim's just going to load that now.
Bear with me one moment. Make sure I get the right screen. And then I will need to.
Condor Gold is to find a mineral resource, 2.3 million ounces of gold, on the La India project since starting exploration in the area at the end of 2006. The mineral resource is contained within quartz veins and breccias, 7 different prospect locations, all within 10 kilometers of the historic La India gold mine. Whilst each prospect has its own story, potential to expand with further exploration, on this video, I would like to introduce the principal La India vein set, which contains just over half of the mineral resource, 1.3 million ounces of indicated and inferred gold, 890,000 ounces at the more confident indicated category, and 370,000 ounces in the inferred category, most of which is in the deeper parts of the ore body, where wide-spaced drilling was searching for the limits of mineralization, which still remains open in several directions. Of economic importance, the style of mineralization is amenable to both open pit and underground mining. Feasibility study completed in 2022 details plans to excavate a 200-meter deep pit along the central 800-meter long segment of the vein to extract 7.3 million tons of ore, grading at 2.6 grams per ton to produce 602,000 ounces of gold. A preliminary economic assessment released the previous year showed how mining could continue underground beneath the pit. I would now like to take you on a walk along the 1,600-meter long India vein from north to south. At the northern end of the vein is a single planar vein dipping at 45 degrees, locally exposed, running up the side of a hill. The bulk of the open pit resource is in the central 800-meter segment, approximately half of the vein, where the vein splits into a thick set of steep, stacked veins and quartz breccias, with the gold concentrated in the zones close to where the vein splits. Here, part of the northern vein stack is still exposed, showing classic low sulfidation epithermal textures, such as banding, bladed calcite replacement texture, and brecciation in the footwall. At the southern end of the stacked vein segment, the smooth India fault plane that forms a footwall to the mineralization is well exposed, along with a remnant of the brecciated vein. The southern end of the vein dips at 60 to 65 degrees and can be traced for a further 400 meters to the south, where it was exploited at only shallow levels by previous miners and artisanal miners. Further south, the vein cannot be found at surface, but deep drilling has returned some excellent intercepts at 200 to 300 meters below surface. Drill intercepts of up to 16 meters true thickness at 10.2 grams per ton gold have been returned. This mineralization is interpreted as a continuation of the India vein in a down-faulted block. We believe that the southern end of the vein has been displaced by a major regional fault, the highway fault, and down-thrown several hundred meters so that the entire epithermal system is hidden and fully preserved beneath the surface. The full extent of this hidden, deep-seated mineralization remains unknown and in need of drill testing. This location, a subsurface continuation of the open-pittable segment of the India vein, could easily be accessed for underground mining from the bottom of the pit, and is a primary target for the resource expansion and the development of the underground mining phase of the La India project. Thank you for listening. Luke English, resident geologist at La India project for Condor Gold plc.
Many thanks for showing that, Tim. And that's a very recent video from Condor Gold there, and it was just released 4 days ago. So Mark, you've now got control of the screen again, if you want to, if you've got any more slides to show us, or if you just...
if I just press forward, has that gone forward, Sarah?
So you now need to share your screen. At the bottom, you'll see a green arrow which says share screen. If you click on that,
click it back. Okay.
Yeah,
right.
That's all right. And just
Okay.
there.
Has that worked?
Yep, we've got you.
Okay, so how I can wrap this up in a few minutes. How much time have I got left just after that video? Could you give me an indication?
So you've got 8 minutes left.
Okay, that's working. Great. So I'm now just going to go on to the I'll go on to the slideshow. Okay. So I've covered this this slide, and if you look to the south where it says La India vein set, that's the 1.6 million out, 1.6 kilometer, sorry, open pit that Dr. Luke English just sort of walked you through and did the video. So if we just stay with that pit for a moment, this is where the reserve is in that pit, and this gives you 82,000 ounces of gold a year. So I'll let people read this at their own leisure, but basically a feasibility study is plus or minus 10 to 15% accuracy and costs us $7 million to get there just for that pit that you saw there. And so it's a really super high level of confidence that the gold's there, and you can see it in that banded quartz material that Luke pointed out in 3 things. So just have confidence that this looks really, really thorough, that it's there. I'm going to go forward. This touches on valuations again, so I'm going to skip over that because we've kind of touched on it. This is the processing plant site. So this is a animation. I have another video on this, but go to Condor Gold YouTube channel and you'll see a fly through of this for 4 or 5 minutes, done by an engineering firm from Australia called Hannon Engineering. And this is the photo on the first slide I showed, that where the primary crusher is. I took that photo. So this is where everything is laid out. So this is now 50% designed, engineered, and super detailed. And we've got all the drawings and everything for this now. We've got the sagmel in the country I mentioned. These are some of the intercepts on the pit. I'll skip those because Luke spoke to them, but it's very high grade. The resource expansion, we just drill underneath the permitted areas and we add 1 million ounces. This one you saw on the video, but very high grade, very exciting. It's completely open and a preserved system to the south. This is over to Cacao. This is 4 kilometers away. We drilled this about 18 months ago. And if you look over to the left, there's some of the drilling. We've got 4 kilometers here. Now, this is a very big vein. Just bear in mind that the main vein is 1.6 kilometers, and that's got 1.3 million ounces on. This is 4 kilometers. And we think it's the next Landia vein, Cacao. So if you look at this long section here, everything beneath that blue line is greater than 10 meters true thickness of mineralization. That's massive. That really is great width for underground mining. Now, at the moment, we're clipping the surface, and this is what Luke talks about. We got this fault to the south. There's no mineralization really on the surface. We've got 100,000 ounces here, but we think this could be easily over another 1 million ounces. It just needs drilling, and it's going to be an underground mine. But it's the textures of the vein, when the geologists look at it, are exactly the same as Landia vein. It's a really good, healthy, strong-looking vein. Environmental, social, I think I'll just kind of wrap up with this. We do huge amounts with the community. We've done a water purification system for $250,000. We give 452 households 5 gallons of drinking water twice a week. We got lots of involvement groups with the elderly and the youth and different committees. We're running training programs for over 100 people at the moment to be for the future jobs in the mine. And we have a social team of 12 people. We have information offices in the local community, manned for everyone to ask questions. So I'm just going to wrap up by saying Condor's got, we add the silver and Rio Luna in, 2.5 million ounces. We're fully permitted to construct and to operate. We've got a reserve case of 82,000 in reality. If we add the other pits in, we get to 100 to 120,000 ounces of gold a year. If we add the underground in, we get to 150. We've got the mill in the country, and we've done a lot of work on what if this could be in terms of major gold district. And I've shared a slide there saying could be up to another 12 million. It probably won't, but if it came in with another 3 to 5, we'd all be delighted. And that's part of the value that hopefully a big producer would see when they come and assess this project. So with that, I'll finish my presentation. Over to you, Sarah.
Many thanks, Mark, and thank you for sharing that new video, which is helping us visualize exactly what's going on at ground level. Now, you and I have spoken to each other for years, not decades, as I said earlier in the event. This, in my opinion, this is a tier 1 project, fully permitted. You have feasibility studies, you have the land, you have a mill in the country, you've cleared 14 hectares of site, you own 100%. The government has given its blessing. So I'm just wondering how conversations are going with potential buyers, and B, if you don't sell, what's the plan? Is it to get a joint venture going to get this tier 1 project into production?
Well, thanks for the question. Yes. In terms of the sale process, we announced last November that we've appointed a small investment bank in the UK called Annum Partners to run a process for that. Takes time. They take sort of 6 weeks to prepare information memorandums, which are 80 pages, teasers, executive summaries, financial models. We have a virtual data room with all this data in. All the technical stuff is there. I mean, it's a massive data room after 12 years of work. And has all the detailed designs for the tailing storage facility and the processing plant and so forth. So we've got it still about, we gave the market update about 10 weeks ago. We've still got 9 companies under NDA. Who are all in the data room having different stages of due diligence. We've had 3 companies go to Nicaragua to do site visits of the project. and we've got 4 non-binding offers. Now, the non-binding offers, I can't disclose the sums, but the idea for us is to get one of those people who put a non-binding indication into binding. And as soon as that happens, we'll announce that to the stock market, because that becomes material. So there's a lot. The message I give is there's a lot of interest. And not only that, there continues to be a lot of interest. I had an hour on the phone last Friday with another, a very big investor based in the US, incidentally, who wanted to join the process. So we've sent him NDAs and said, well, you're welcome to join. There's nothing, it's still there until something's signed. So there continues to be interest, because there's a massive scarcity of projects that are construction ready and on a plate. So I think the project will get sold. In terms of plan B, if you like, and there has to be a plan B, because Jim Mellon, our chairman, 20% shareholder, ultimately has to be happy with the price. He has a major say in what price this gets sold for. And he won't let this go for nothing. Jim's a very wealthy man. He can continue to fund the company. And the message we've been giving to people is, if you think you're going to get this on the cheap, forget it. We'll put it into production ourselves. So if we were to do that, and it's an if, we'd probably start with something smaller, simply as a pilot plant, to get some cash flow in, so that we could easily, for example, we've done detailed studies, so I can say that we could put up a 500 ton a day mill if we wanted to as a pilot, and produce high grade pit and come up with 30,000 ounces of gold a year for a minimal capex. So I think there is a plan, or there is a plan. We've looked at these alternatives. Our preference, and we think the right thing for all the shareholders, is to get an exit as long as the price is correct. And that's what juniors should be doing. They go on the frontier, they find it, 99% fail. They produce something super exciting that a big guy comes along and says, that's my next mine. That's the model. So we think that's the right thing to be doing at this juncture, but the price has to be right. So I've got you on mute, I think now.
Oh, I put myself on mute. So finally, because we're overrunning as ever, the bigger picture for gold explorers, is it still exciting? Is the potential for upside within this sector?
Well, we got the biggest gold miner in the world, was Newmont, producing 7 million ounces of gold, decided it was too small, and bought Newcrest with another 2.5 million ounces. So the M&A at the top is trickling down already to the juniors. And we had 2 deals last week announced. One was Silvercrest buying something in Australia, and another one, the Chariot Gold in the UK, got a $250 million investment. So there's a lot of M&A going on. It's the right time, particularly if you can produce gold at half the current gold price. So I think the consolidation and the M&A will continue. And personally, I think we will break through. Gold's gone sideways for 3 years, between 1,700 and just over 2,000. And I think there'll be a major breakout in gold this year. So I think we're in the right space at the moment.
Lovely. Thank you very much indeed. It's always a pleasure. Mark Child, Chairman and Chief Executive of Condor Gold. Thank you very much indeed. Thank you.